I want to say a shout out and a thank you to all of you who've been helping me. Big boy, thanks, shout out to you. You've been helping a whole lot, so I got to give credit to y'all. This guy here, he's being a good help. Consor, I can't even pronounce your name, sorry for that. Just New, this my boy. He helped me too, boy. And Noah Brown, thank you. That's basically the ones who've been helping me. Now I can do this video for y'all. This is why I be asking for help so I could clarify this stuff. This for noobs. All right, noobs, y'all ready for this video? Here we go. I did this clear as possible. I've been working on this all day, just trying to get it clear, trying to make it clear so a 5-year-old could understand. All right, I'm giddy and I'm excited because once I could learn something, I hurry up teach it, no matter how small or how tiny it is. I hurry up teach it and try to break it down so people can understand. Okay, this is very clear. Okay, a lot of times you're asking what strategies to use or which direction to go when you have an account under 10,000. Don't ever short or bet for it to go down when you have an account less than 10,000. Always use long strategies, always go long. However, okay, and you see how clear this is? I drew this out clearly. I tried to figure out how to make it look neat. I was working on this all day. Coronavirus got us locked down, so I bought. I know y'all gonna love this. Y'all gonna love it. I doing this for us. I doing this for y'all. All the noobs, all the beginners, all us. And as you can see, if you want to go short, make sure your account is over 30,000. At the same time, it's not good to use long strategies or to go long if you have an account over 30,000. Okay. Now, there's a lot of questions. I can feel the questions. If you don't know what it means to go long or to short, I did videos explaining that very clear what long means, what short means, what it all means. Okay. So I'm building up from there. Okay. Let's focus here because most of our accounts are under 10,000. There are 4 long strategies that will that allows you to win more times than lose. Okay, for example, if you play in a chess game against somebody and it's 10 games, you want to win at least 6 games to win the whole match. You can't win the whole match if it's 10 games and you only win 2. These strategies will allow you to win more than half of the time. That's how you can make a profit. That's how you can win. Okay. Now, we know long means it goes up and it's green and so forth. This is why I put the colors. It's so neat. I just was looking at this and staring at this for a long time. Okay. I saved the pick. So even if I move it, it's still saved. Now, here's the next questions. These 4 strategies. You think this bad? Check this out. I just do this. And you know what's sad? It just saddens me that boom! Look at that. Look at that. This is awesome. Look at that. I know y'all can give me props for this one, boy. This is gonna be video of the year, boy. It's just me. See, because I'm just learning. And I was like, I'm a very good teacher, okay? I'm a very good teacher. And to me, when I was learning, and I still learning, I'm still a noob, I just was like, hey, this certain things is not drawn out clearly. I watched Tim Sykes, Tim Grittani, Michael Good. I just sent Michael Good an email, Twitter, Mark Crook. I watching all of these people. Even Humble Trader, that the Chinese girl. I watching all of them, and nobody could break this thing down clear. I'd be like, mother spike. Nobody. It's like they don't have the gift of teaching. Look at this. Look at this, my friends. Look at this. Look at this. We gonna get this money. I feel it. I always ask myself, I did the research, right? And I get a lot of y'all to help me. And I was like, okay, this and blah, 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 blah. And I say, okay, how can see this thing when you teaching people, and this why I need Tim, I need Stephen Ducks especially. I respect his information he teach, but it's not teachable. It takes time. It took me the whole day just to draw this simple thing. See, they lazy. They don't have time to sit down and try to figure out how to express it in a clear way. That's the problem. They're not teachers. They're good traders, but they're not good teachers. I'm a good teacher, but I'm not a good trader because I'm a noob. But I could teach it. I could teach it very clear. I know how to sit down and work it out so it could be very clear. Even as you're watching this now, I know some of you experts are smiling like, oh my goodness, I wish I had somebody to break this thing down like this. And this only for when you're going long. I can work on the one when you're going short. If this video get good thumbs up and I get good response, I can do the shorting strategies. But let's go through this, man. Let's do this. This is how I always wanted somebody to explain it and break it down to me. This is why I did it like this, because this is clear. I gotta save this. Don't close this, buddy. Save this, because this is what I always can pull up. Now, how to use this. If you're a noob, if you're a beginner in trading, right, and you watch my videos on how to long and what short means, what does all of this mean? Let me go to the beginning. There is one thing. Let me put this here. There is one thing. Go for high percent gainers. Okay? I don't want to get too much into detail on how to find it and all that. That's another video. This is always the instruction that we get from all the Tim Sykes and Stephen Ducks. Look for high percent gainers. Okay? High percent gainers. This is the first thing. I'm not going to go into how you find it. There's a lot of websites. They have all the different ways you can find it. Yahoo and Finance and all of this criteria to add. And sometimes your platform is tell you, regardless, there's one mission: find high percentage gainers. Okay, here is a website already where you can find that. No, my bad. Here's a website. Okay, these are the high percent gainers. This is what they look like. Okay, these are tickers. If you don't know what the ticker is, I explain what the ticker is. These are high percent gainers, all of these. I think this was for today. But these are high percent gainers. Okay? High percent gainers. Okay? These are the ones we're going to trade. Now, here's the revelation that I want to explain to you guys that I wish I had somebody explain. Let me close this because I don't need this. That's high percent gainers, what they look like. They got these, their percentage is high. You know, this is 0%, but it's rising up. It's rising up. You look for them high percent gainers. Let me explain something. When you find high percent gainers and you look at the charts, they're going to look like one of these 4 charts. Boom! I've been waiting for years for somebody to break it down simple like that. I hate y'all. I hate some of these guys, them on YouTube, and Tim Sykes and Tim Grittani and them. Well, no, Tim Grittani, I like him. He's good, but he still didn't break it down clear like this, right? They all missing that gift of teaching. They don't have the gift of teaching. I'm mad when they say hate. I don't hate them, but I mean I hate the fact that they can't break it down and teach clear like this. When you find it don't matter if you find 100% high percent gainers, When you click on each one of their charts, they're going to resemble one of these four. Is that clear? If you take these high percent gainers, if you have 1,000, you could categorize them and they're going to fit in one of, they can all, maybe 200 of them can look just like this. Another 200 of them can look just like this. Another 200, another 300 of them can look like this. Another 400 of them can look like this. You could fit any high percent gainer, you could fit into one of these categories. Boom! Them sakes, you can't touch that. Stephen Ducks, you can't touch that. Y'all can't touch my teaching skills. I got the teaching skills. I's a master and an expert at teaching, boy. I could take anything these dudes saying or teaching or anything I learn anywhere in life, and I could break it down so clear. A 5-year-old could watch this and start trading and making millions. That's the whole point of teaching like this. You can't give out information trying to teach people stuff and you can't break it down so people can understand. Now, I'm very clear about that, okay? Now, let's flow with this, okay? Let's get a little deeper. Let's say you find a chart. Now, I got to explain some more. Let's say you find a high percent gainer and the chart looks like this. How do you trade it? How do you know when to enter? And we're going to ask that question with all of these and we're going to answer them. But I'm not going to get too detailed into these, okay? I just want to give a little simple what's going on. This is the root, okay? I just want to be simple. I'm going to keep this simple. How do you play this? Here's the broad thing of how you play this. And then I want to explain what's going on in each one of these as well, okay? As you can see by eye, there are differences. But when I dig into each, you can really understand the difference, okay? Let's say you find a high percent gain and it looks like this. Let me explain this, okay? To trade this, if you find a high percent gainer maybe at 8:30 or before the market opens and it looks like this, only trade this around 9 a.m. to 11:30. Don't trade this outside this 2 times. That's the first thing, okay? Also, as you see the different times, you don't have to trade this one, number one, at 9 a.m. and 11:30 and then trade this one and then trade this one at the different times. You don't have to do it that way. You could just trade this one and wait for tomorrow, and you could just trade one each day. You don't have to trade all. You could just use one of these and get your win, get your $100 or $200 win, and wait for tomorrow. And you could choose which one of these times you want to trade. Or you could be watching two. You could do this and this, or you could be watching this, this, and this. But you don't have to do all four. You could just pick which time frame you want to use. If you want to trade around 2:30 to 4 o'clock, look for gap up charts. See, this is how to use this. If you want to trade around this time, don't use the charts that look like this. Don't use the charts that look like this. Do not use, multi-breakout, you can trade this anytime. But mainly, don't use these charts. Don't use 1 and don't use 3 if you want to trade between 2:30 and 4 o'clock. Look for all the high percent gainer charts that look like this. We call these gap ups. If you want to trade between 11:30 and 2 p.m., don't trade gap ups or don't go for high percent gainer charts that look like this. Get the ones that look like this. This is how to use this. This is the root. Anytime you get confused, anytime you've lost your way, you got to come back to the beginning. This is the root. A lot of these expert traders have forgotten, and they've become so lost. They forgot the basics. They can't even teach basics no more. They can't even break it down for us newbies. We are the newbies. You know, if I get Tim Sykes or Stephen Ducks to see this, or Tim Grittani, they would be like, "Oh my gosh, I wish this dude was there when I was struggling." You don't think I could make $1 million from trading, breaking it down easy like this and getting it clear up like this? You out of your mind. You out of your freaking mind. I could do it, and you could do it with me. Don't let people tell you nonsense. We could make 1 million in 1 year if I could keep on this road and breaking everything down clear like this. Okay, stay with me. Pre-market breakout, right? We know there's a lot of other stuff like stop losses and blah blah blah. But hey, I'm trying to keep this short and simple and simple. We'll deal with all the rest of those stuff in other videos, and I will break it down clearly. So when you come to chart, you don't understand all you have to do. Okay? Here we go. Oh God, I love it. I feel so good right now. I feel good, Dread. You know what this is? I feel good that I can help, Dread. I can break this thing down. And it's marvelous in my eyes too, because I looking at it and I'd be like, Mother Spike. I wish I had somebody to break it down like freaking this. This took all day though. This took like musty 11 hours for me to research and get everything up like this though. But it's worth it, but it was freaking worth it. I must say, it was freaking worth it. Now, I want to just give a little talk on this. Okay? Excellent. Noob Cybot wins. All right, listen. Y'all check this out, right? Check this out. I already explained what resistance line is in a simple, easy video, okay? So, pre-market breakout, it simply means when you search for all the high percent gainers and you find a chart that looks like this, when I say chart looks like this, I mean specifically, if you notice, in the past, it's like everything like on the same line almost. And then all of a sudden you notice one of the lines, it shoot up a little bit above all the other lines. As you can see, that was a breakout. I explained what a breakout is. That's a breakout. See, because the rest of these, the top of these, the highest, it rose above the highest ones in the past. That's a breakout. Okay, that's a breakout. Okay, now that's all you need to know so far. Let's look at some charts here for a minute. Okay, pre-market breakout charts. As you can see, there's the time frame. I only did this so you can see the time frame of pre-market. Okay, let's look at. Remember, I was showing you all that. Keep in mind now, we looking for charts that look like this. Watch this. Watch how you see real charts. You see this? Doesn't that look like the same little demo chart I drew? Look at that. All the lines are the same level, and then all of a sudden, look at this. This another one. Oh my goodness. You ain't seeing the same pattern? Look at this. Everything at the same level almost, and then all of a sudden it start rising up above the normal height of the other bars. That's a breakout red. See, that's it. That's pre-market, and the time frames would be between 9:30 and so forth. That's the pre-market times. Now let's look here. See this? This is another one. I could see the same pattern. See? It's like all of them at the same level, and then all of a sudden it just goes above. This a breakout. Yeah, that's it. See, it's the same little demo. See, you ain't gotta get confused. See that same broad pattern. Don't get caught up with all the lines and everything. Just see if you could recognize the same pattern. That's it. That's the pattern. You can recognize the pattern. See, there's a pattern right here. All at the same line. See the same pattern there, all at the same line, and then a breakthrough. Even this exactly right here, all at the same line, and then all of a sudden one of the lines gone above the rest of these lines, all of them that was at the same line are just gone, it just rise up above. See, that's it right there. That's the breakouts. I seen the same patterns. You could look and you could see the same patterns, Red. Same patterns, okay? So I think we have gotten that sorted out. Yeah, okay, that's it. Okay, good, good, good. Let's move on to the next. Okay, I think that's clear. Let's go to this gap up. Now listen, don't focus on this just yet. Okay, let me, you know what, let me just add this while I add it. You got to be able to recognize the difference in the charts. That's why I drew it like this. Once you could recognize the difference, okay? All the charts, all the high percent gainer charts that look like this, they call them gap ups. All the high percentage gainers that resemble this, they call it they call it pre-market breakout. All the ones, it's a lot of different names for this, but midday perk, I say midday spike up. I think Tim Sykes say supernova. They have different names for it. It's the same thing. It's the same pattern. It's the same look. And then multi breakout. It's the same. It's the same broad formula. Don't get caught up in nothing else. It's the formula. These are formulas. The formulas don't change. A plus B equals C. That's all I see in here. Formulas. Okay. Now stay with me. Stay with me. Stay with me. Stay with me. You might ask the question, where do you enter? Now. Let's stop here for a minute, okay? You don't short these. You entering to go long. That should be clear. I just want to make sure that the noobs are understanding this. This is what it means. These four long strategies is for you to go long only, not to for you to short. Don't bet for it to go down. Okay? These so your only questions would be, where do I enter to go long? Where do I enter to go long in gap up? Where do I enter to go long in a midday spike up or in a supernova? Where do I go? Where do I enter to go long in a multi breakout? This is the question you ask. You're gonna bet for it to go up or green. Okay? Now let me say this, okay? Let me say this. Let me say this. I'm putting it together now, a criteria. I have to do more research. I don't have everything together yet, but I did an example of what it means. Okay, let's put this over here. Let's say before you enter, this is going to be very clear. Before you enter a pre-market breakout chart or a high percent gainer chart that looks like this, there are there is a list of things, a list of conditions that you have that has to be met in the chart. When all of these are met in the chart, it's okay to enter. I wish Tim Sykes explained it that clear. I wish Stephen Ducks explained it that clear. I wish all of these traders explained it that clear. I hate to see how rich they are and have all these millions and they can't break this thing down clear. That bothers me, boy. Check this out. Once again, where do you enter? Don't enter yet. You have to check to see if the chart is meeting all of the conditions for you to enter first. For example, the price, let's say one of the conditions that I have to meet before you enter is the price of the stocks have to be under $4. A lot of the stocks have prices over $5, $11 per stock, $21 per stock. If the stock is not under $4, it doesn't meet this condition. Don't play it. Okay? I wouldn't play it. Play it when it meets all the conditions. Is that clear? See, because from what I'm learning, if you decide to disobey number one and number 2 through 5 is being obeyed, it decreases your winning percentage. Remember what we were saying about if you play in chess and you have 10 games, you want to win at least 6? As your winning percentage decrease, if you disobey 1 and 2 and 3, and you only obey in 4 and 5, your winning percentage drops from 70% to maybe 20%. Meaning if you playing chess and you playing 10 games, you only gonna win 2 games. You're not gonna get a profit like that. You have to win at least 6 or more. You have to get at least 51% or more to get a profit. You obey everything in the criteria before you enter, it's going to keep your winning percentage high, 80%, 85%, 70%. You needed to stay high so you could win more. That's how you're going to get rich. You need to win more. So let's use intelligence. Make sure everything on this list is obeyed, and then you enter. Okay, we're trying to make 1 million in 1 year. Okay, we got to use intelligence. I can't teach you intelligence. I'm trying to, but I can't teach you how to be intelligent. Okay, let's look at this. This is just an example now. This is not the actual criteria, by the way. This is just an example of what I mean when I say each of these have its own criteria. Okay, each of these have its own criteria. You can't use the same criteria for this when you trade for this, when you trade for this, when you trade for this. They all got different criterias, different things you have to meet because they're different. They're actually different charts. You have to trade. You have to have a different approach with each of these. Okay, so for this one, pre-market breakout. Let's say the stock is under $4. We put a tick there. Okay. Excellent. Now let's say the volume should be 100 million. Once again, if it's less than 100 million, don't trade. Don't enter. Let's say it's 100 million. Excellent. We ain't enter yet. Let's say for this one of the criteria to enter is you want this breakout to be because of news. If it broke out and it's no news, don't enter the trade. Let's say for this example, it did break out because of news. Another criteria is met. Enter before 9:30. Let's say it's 10:30. Don't enter. You're not obeying this criteria. Let's say it's 9 o'clock. Excellent. Your criteria is being met. See how clear and simple this is? Tim Sykes and Stephen Ducks and all the rest of you traders. Y'all don't have the gift of teaching, and I can't teach y'all how to teach. But what y'all could do, you could give me what y'all know and the information y'all have, and I will take the days to try to rearrange it and try to figure out how to express it so it could be clear to a 5-year-old. And that's what I did here. I took all the information and I tried to figure out how to express it so it would be very clear and simple, like how teachers used to teach me when I was in 2nd grade. Number 5, this is the last criteria. Make sure all the volume bars at the bottom are red. If all are not red, do not enter the trade even though you meeting all 4 of these. And I give you why. Okay, we about winning. We got to win. Y'all don't know. I see, you know what? And this another thing. If all the bars at the bottom are red, excellent. Now you can enter the trade. Okay? Now, when I say enter, you 70% gonna win. You know what's weird? I've seen Tim Sykes and Stephen Ducks meet all their criteria for the chart, and some of them they still lose. Why? Because the winning percentage is 70. You're not gonna win every time. I saying that to say, don't play these charts and your winning percentage is 60 and 50 and 40%. I see people at the highest winning percentage and they still lose. So what you need to do is use intelligence and say, hey, every time I play this chart, I want to be at 70% winning percentage. Every time I play these charts, I want to be at 70% winning percentage. That's how you need to approach these things, okay? Now, once again, let's look at this chart. Gap up for a minute. Let's look at how this works, okay? Now, when we look at gap up, right, this is the only thing that I want you to focus on. This gap, this area right here. Don't look at the shape of this. Don't get confused. Don't look at the shape of this and why it looked like this. That's not important. We don't give a crap about how this look. And we don't give a crap about how it looks over here. We give a crap about this space right here. What happens is, for some reason, the chart is like somebody erased the line. It's like somebody erased the line. That's how you can tell it's a gap up. It's as if somebody erased, this is supposed to be a straight line, and it's like somebody erased the line, and you'll be like, what happened? It's an incomplete chart. No, it's actually called a gap up. Okay? What happens is that when you look for high percent gainers, some of the charts are going to look like this. It's going to look like somebody erased the line, but it's actually called gap up charts, and you could trade these. And okay, now let's keep this in your mind. Let's look at some real life examples, and let's see if you could see the same pattern in these real life example ones. This is why I did it like this. Boom! Look at this. I can see it. I see it right here. You see that? It's like it's supposed to be a straight red line, but it's like somebody erased it. You see, that's it. That's the pattern. Who cares about all of this? Who cares about all of this? I want to see that little space, that little erased space. See there again? See that? See that? See the space? It's like somebody erased it. See it here again? See that? It's being erased. That's gap up. See this again? See that? See that? It's supposed to be a continuous line or a bar. It's like something missing. See, you can see it here. It's the same concept. See, even here, I can see it. See it here too. Mother sick. See that? That's a gap. It's like something missing. It's like it's like you erased the bar. Like this is supposed to be a straight, long, red bar, but if somebody erased it, that's gap up. That's a concept. I could see it. Once again, I could see it right there. See that? See that? See it here again? Yeah, these gap up, all right. Yeah. Yeah, you go. Yeah, we learning. We coming for the millions. We coming for the money. We getting it. We getting it. We getting this, boy. We getting it. We getting it. Lovely. Lovely, lovely, lovely. We getting this. We getting this. There we go. See gap up there again. All right, that's it. That's it. We got this. All right, we got it. Let's move. Let's move. Ah, man, I have some good sleep tonight, boy. Just knowing that y'all finally cleared up after all these years. Okay, let's look at this. And once again, this has its own separate criteria. And this the same way we go through the criteria here. I putting together the criteria. I think is about 8 or 9 things you have to meet. And then I have to do. I have to make a separate video for number 1. A separate video for number 2, number 3, number 4, because when I go in through each of the criteria, I have to figure out how to explain it clearly so you could get it. Okay? I can't just give you the criteria. I have to show you what each criteria clearly means. How do you know? And so forth. Okay? That's going to be very nice. Boy, y'all don't know, buddy. For free. The nerve of Tim Sykes and Stephen Duck selling us information that we can't even understand. You know what I mean? We're paying thousands of dollars for information we can't even understand. All right, let's go here. Let's study this midday spike up. I call it a midday spike up. They got a lot of names for it. Midday spike up. Let's study this, okay? Once again, when you look for high percent gainers and the charts look like this, don't trade this until it reach 11:30 or between 11:30 and 2 o'clock. If you find a high percent gainer and it's 9 a.m., wait until 11:30 between 2 o'clock to trade it. I want to be clear about that, okay? Now, oh, I love it. I love this. I love this. You see how clear this is? You see how you could look at the charts and you're not confused anymore? I happy I did it like this. It took a lot of thought, and you have to have the gift of teaching to do it. Let's look at this. Look at this concept. The concept is we don't give a crap about all of this here. We don't give a crap about all of this. What we give a crap about is this long shoot up. I call it a long spike up. Tim Sykes say supernova. Super. This all we care about. That is one line shoot way up. See, it's not like this breakout. A breakout, it shoots up, but it doesn't go way up like this. That's the difference. It just breaks out a little bit and then it continues. But this is shoot. You see, the highest is here. It break out and it shoot way up, like it going up into heaven, like way up there, like oh, I can't even get the mouse off the screen. That's what we're looking at. Now, let's see if we could recognize this same concept in charts. Sorry that the video it was so long, but hey, we learning. Oh, look at it, look at it, look at it. I see it, we got it. Let's look at this. Oh my goodness. Let's look at this foolishness. Look at this foolishness. See, we can see it right here. You see it, you see it. See it right here, for the sake. See it right there. Remember what I was saying? It starts off normal, everything out the same range, and then it breaks out a little bit, and then it shoot way up. That's what you're looking for. You see it here again? See it right here again? It's starting normal, and then it breaks out, and then it shoots, spike way up. Let me see if I can see some more. I seen it. See it there again. It's come off dead normal, and then it break out a little bit, and then it shoot up, way up. See it there again. It start off normal, and then shoot up, and then shoot way up. See that long line? That's what we're looking at. I seen it in every which way. Look, bring this down some more. Let me see some other charts here. Let me see some other charts. Let me get one more. See? No, this look like a breakout here. But yeah, it's the same concept there. Look like they run out. Look like they run out, but we've gotten the gist. See these long spike ups. That's it. Them long spike ups. And once again, to trade this or to know where to enter, once again, let me say that clear. To know where to enter, it has a criteria. I think I have maybe 10 things that you have to meet first. You have to look at the chart. There's some things you have to put a tick to see if the chart is meeting these things, the criteria, or meeting the things in the list. Then when it does, when you enter, you have a 70% chance of winning, at least. Okay? I did tell you you could still lose, but I prefer to lose at 70% with 70% chance. I don't want to be entering a trade and I only could win 30%, because that means I could lose 70%, which means I probably gonna lose. You see what I'm saying? You don't want to enter trades with the odds against you like that, Red. That's all I'm saying. That's you know, if the odds, if your winning percentage was 100 and you meet all the conditions in the criteria, You would always win every time you find a chart that looks like this and you meet the criteria. You will always win the chart. But because the winning percentage, the highest it could go, is 70%, it means if you find 100 charts that look like this and you enter meeting the criteria, you're going to win at least 70 times and lose 30 times. That's what you want. You could make a profit like that. You could make big profits like that. Okay? That's the whole point. And as you can see, okay, let's move on to this number 4. I've been on this kind of long. Let's move the criteria. Let me explain this multi-breakout. I don't want to get too deep because I can separately get deep into all of these. Okay? Okay. I already explained to you what a breakout is. You have the highest, and you see this bar. Hold on, let me change it for me. You see this bar right here. Even though it high, it came up to the same height as this, and this was the highest on the left. See, and that's the key. What was the highest on the left? You compare it to this. It went over. It grew higher than the highest on the left. So that's a break. That's what you call a breakout. When we come up here, what do we notice all of a sudden? This is the highest on the left, and this one here became higher than the highest on the left. You don't compare this to this. We done finished with this down here. Okay, this another breakout. So when you have numerous breakouts, as you can see now, this the highest, and when this dropped, it started rising, and it came up to the same length, and all of a sudden it went higher than the highest length on the left. This the highest on the left, not this. Okay, so as you can see, we have 3 breakouts. We call that numerous breakouts. We call that multiple breakouts. Okay, that can happen in one day. Multiple breakouts, or they say multi breakouts. There's no particular time to trade this. Okay, I think that was quite clear. So what happens is when you find high percent gainers, some of the charts are going to resemble this. Okay, you could see multi breakouts. You could see multi breakouts. I don't even know if I could find charts like that. I was trying to see if I could find charts with multi breakouts, but I might. Y'all want to give me some time here? Let me see. Multi-day breakout charts. See, these people searching for it. I was so excited. I was trying to see. I couldn't find a clear one. I think that was my issue. See, these charts are not clear, Dread. Yeah, okay. See, you might be able to see the concept. Okay. Yeah, see? Forget all this MEA. Let's just try to see if you can see the pattern. This the highest, of course, to the left. Nothing came up to that height yet. Okay, this way it came. This is right here. Okay? This came up above this highest on the left. Okay? Climb up, and this seemed like this another breakout again, because this was the highest and it breakout again. Then this seems to be another breakout because this the highest and it went higher than the previous one on the left. Then this another breakout because this went higher than the previous one on the left, went down. This another breakout right here because it went higher than the previous one on the left. It's a numerous breakouts thread. It's a numerous breakouts. So as you can see, you could see it red. You could see the patterns. See this? Let me see this one here. Right, this, of course, this is a breakout. As you can see on the left, this was the highest, and this came up to the same height as this, but then it got higher. So this was a breakout. Yes, that's a breakout. but I looking for a multi-breakout though. Yeah, like this chart. Yeah, this chart was a good example of a multi-breakout. Um, Let me see. See if there's a multi-breakout. No, I see breakouts, but I don't see multi-breakouts. Okay, I think we got it. So that's it. I can save this chart now because I haven't saved it. But y'all, talk to me. Talk to me in the comments. I appreciate it. Thank y'all for the help. Let's do it. I'm out.